A compilation report is one of the most powerful and useful things that you can provide as a certified public accountant to your clients. So let's take a look at the requirements of ARC 80 compilation engagements. First, let's talk about applicability. When should you follow ARC 80? The standards say that you would follow ARC 80 when you are engaged to perform a compilation. So basically, if your client asks you to perform a compilation, then you would do so. That's the trigger for ARC 80. So what are the objectives of a compilation engagement? One, we're going to assist management in the preparation of the financial statements. And two, we're going to issue a compilation report. Now that first piece is a non-attest service. The second piece is an attest service. And therefore you need to consider independence because you're doing non-attest and attest if you prepare the financial statements. So what basis of accounting should you use in a compilation? Well, that really depends on the needs of your client. Most people would follow generally accepted accounting principles, GAAP, or the tax basis of accounting. But you can see other options are available, such as the cash basis, the regulatory basis, and the contractual basis. Now let's talk about documentation requirements. In peer review, the peer reviewer is going to look at your compilation file, and we want to make sure we have in that file what is required. So what is required? There's really only three things that are required in a compilation engagement. One, you must have the engagement letter. That letter should be signed by your client and by you or your firm. Second, you need a copy of the financial statements that were given to your client. And third, a copy of the compilation report that was issued. Now, there would be other considerations in the file, such as independence documentation, but these are the primary minimum requirements under ARC 80. So, what must you do in a compilation? What are the procedures to be performed? The procedures are quite simple. Really, all you have to do once you prepare the financial statements is read the financial statements to determine whether or not they appear to be appropriate. And that's the only procedure that you have to perform in a compilation. How easy is that? Now let's take a look at an actual compilation report and see what's in it. Well, we see that the report starts out by saying management is responsible for the financial statements. Though we might prepare the financial statements, management has to assume responsibility for those financial statements. We also see in the compilation report it specifies the period of time that the reports relate to. It also names each financial statement that's in the compilation report and also the related notes if you include notes. Now, you can omit the notes to the financial statements if that's what the client wants. Other things in the compilation report, we say that we're performing this report, we're performing this engagement in accordance with statements on standards for accounting and review services, SSARS. And then finally, we're saying that we don't really provide any assurance here. We haven't done an audit, we haven't done a review, we're not providing any assurance. So I said a minute ago that we could issue a set of compiled financial statements without notes. So let's take a look at that part. We see that there's really three options here. You can omit the disclosures. You can also provide selected disclosures, or three, you can provide full disclosures in a compilation. Normally what I see is just the financial statements and then all of the notes are omitted. Now, if you had a particular disclosure that your client desired to include, but say they wanted only that one disclosure, then you could have a selected disclosure page that would follow the last financial statement in the report. So just imagine with me, it would look like maybe a balance sheet, an income statement, a statement of changes in equity, possibly a cash flow statement if it's a GAAP basis, and then maybe one page with a selected disclosure, say a disclosure about debt and nothing else. That's permissible in a compilation. Your report, your compilation report, would still say substantially all disclosures are omitted. Sometimes there are known departures in the financial statement, and it is permissible for you to issue the compilation report provided you provide the additional language that specifies that departure from the reporting basis. And that language might look like what you see on the screen, and I'll quickly go through this. It just says accounting principles generally accepted in the United States require that material impairments in fair value of owned property be recognized in the balance sheet. And then it goes on to disclose that that impairment was not recognized. So here we have a departure from the basis of accounting, and it is articulated in the compilation report. Sometimes you'll have a situation in a compilation where you look at the equity and it's upside down by maybe several $1 million, and maybe they've had losses over the last 2 or 3 years. And now you're thinking, well, there's a going concern problem. So do you add, or are you required to add an additional paragraph in the compilation report that talks about going concern? The answer is no, you're not required to do so, but I would advise that you do so. So if you've got a situation where you're thinking this company may not be able to meet its ongoing obligations for the next year, then I would advise that you add an additional paragraph after the compilation, the normal compilation report language, talking about this situation. You should probably also have a disclosure. Even if you omit disclosures, you may want to add a selected disclosure that addresses this issue. So, do you have to be independent to perform a compilation? The answer is no. And this is quite common for CPAs to issue compilation reports when they are not independent. And if you are not independent, all you really have to say at the bottom of that compilation report is we are not independent with respect to XYZ company. You don't have to say why you are not independent. You can if you so desire to do so, but you're not required to do so. But at a minimum, you must say we are not independent with respect to XYZ company. So, in summary, compilations are really useful. They can be performed very quickly. They're a really powerful product that you can use to support and aid your clients. To perform the compilation, just remember you need to sign the engagement letter. You need to retain a copy of the report that's issued and then a copy of the compilation report as well. So the financial statements and the compilation report, you'll retain those in your file. The only procedures that you have to perform is to read the financial statements and see whether or not they appear to be appropriate. If there's a going concern issue, then consider some additional language in the notes. Also, potentially an additional paragraph after the standard compilation report language. So I hope that helps. Take care and bye now.